How rich people get out of paying taxes. This is Warren Buffett. He is one of the richest people in the world because he runs Berkshire Hathaway, a company that makes a lot of money. Basically, it's a holding company that owns a bunch of other companies, like Geico, Dairy Queen, and a big railroad, as well as a lot of stock in other companies, like Apple and Coca-Cola. So when those companies do well and their stock goes up, Berkshire Hathaway stock also goes up. In 1965, when Buffett took over the business, each share was worth $19. Today, it is worth almost $500,000 USD. Buffett owns nearly 240,000 of these shares. Here is where all of his money is. But Warren Buffett is known to point out that he still pays less in taxes than his maid. She pays twice as much as I do. I don't like that at all. They pay different kinds of taxes, which is why Buffett mostly pays taxes on the capital gains he makes when he sells stock. His maid pays income taxes on her salary. And that's charged at a rate that's almost half as high. Rich people are definitely not taxed enough. In the United States, the gap between the wealthiest people and everyone else has been getting bigger. And the income of the richest people after taxes has gone up by more than 400% in the last 40 years. Even though the wealth of the middle class has only gone up by 50%, the way these people make money is very different from the way these people make money, and they don't pay the same amount of taxes. People who work for a living and make as much money as I do pay more in taxes than I do. Say hello to Morris. He used to be a Wall Street worker. Now that he's retired, he lives off the money he made in the stock market. I own shares of Berkshire Hathaway, Amazon, and Apple, among others. He's a normal member of the top 1%, except that he uses his money to lobby for higher taxes on rich people like himself. I want to live in a country where most people are in the middle class. We all have enough money to shop in our stores. Most people work regular jobs. They get a paycheck and pay between 10 and 37% in income tax. People like Morris, on the other hand, make a lot of money from stocks. Most of the time, stocks are in real estate. These assets are taxed as capital gains, and long-term stocks, for example, have a tax rate of no more than 20%. I just sold some stock for $400,000, and there are about $50,000 in taxes on that. But that's a lot less than someone with a job who makes $400,000 a year would pay. And, well, most of his money isn't even taxed. People like Morris and Buffett are worth a lot of money because they own a lot of stock, but that money is not real, spendable, or taxed cash. I can look at my stock account and say, oh, I made $1 million this year. But it doesn't have to be tax money. Because of the way our system works, you only pay taxes when you sell something. Jeff Bezos, who owns a lot of Amazon stock, is the richest person in the United States. He pays almost no taxes. We figure out how much he's worth here, but we don't tax it until he sells the stock and turns it into real money. And it is treated as a gain on an investment. This is one way that billionaires can have a lot of money but pay very little in taxes. Some billionaires, like Elon Musk, can use their stocks as collateral to borrow money and live off it. They don't even have to sell the stock to get money they can use. Don't buy. Not a tax. If you have $1 billion, you don't need any money. The rich also use the stepped-up basis, which is a big tax trick for capital gains. If Warren Buffett sold his stock, he would have to pay capital gains taxes based on how much he made, which would be the cost of the stock minus what he put into it in the first place. But if he doesn't sell for the rest of his life, the person who gets the stock and then sells it would only have to pay taxes on what they made after they inherited it. All of the gains he made before he died would be tax-free. It's called buy, borrow, and die, and it's one way that the wealthiest families dodge paying taxes. Because of this scheme and the fact that most taxable capital gains go to the top 1%, lawmakers see changing the capital gains tax as an easy way to tax the rich. President Biden wants to close that step-up loophole and raise the highest tax rate from 20% to 39%. 6%, but only for people who make more than $1 million a year. Critics say it could make people less likely to invest in the stock market or cause millionaires to sell less stock. But it would bring in more tax money, with figures ranging from $200 billion over 10 years to double that amount. It would also mean that Buffett would pay about the same amount of tax as an office worker. But this pile of money that hasn't been earned is still not taxed. We could make the system more fair in a lot of ways. We could put a tax on money. Gains from the stock market could be taxed. The fact that rich people don't pay their fair share bothers most Americans. And changing the taxes on capital gains wouldn't be the whole answer, but supporters say it would be a simple place to start. Our system makes it so that the rich get richer and richer while everyone else stays the same.